please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
It's 0.6% in terms of a gain for the Nifty. 10,185. It started off at 499, now 473.
Yes, 474, still 26% premium.
Yes, there is an offer which has taken place by Manipal and TPG. I mean, TPG holds 20% in Manipal, so that's assumed. But they haven't taken a firm decision on that.
The market is up about 30 points or so. It's actually been a disappointing day.
Today's big point has been the mid-cap action. Listing of Bandhan Bank, all these clearly has helped sentiment. But overall, been a good day for the bulls. At index level, there are not too many stocks which are really participating on the upside. Yes, I mean IOC, HPCL, they have done well. Indiabulls Housing has done well. But in terms of bigger stocks, perhaps State Bank of India, which is up about close to say 3%, Axis up about 1%, Tata Steel up about 1%. But really, not too much of an impact as far as the big stocks are concerned.
Market gains for a second day in a row. Nifty ends 0.5% higher. Sensex clocks a 100-point gain to end at its highest level this week.
Half of Nifty's gains are contributed by financials as bank stocks outperform. Bonds gained sharply on surprise cut in government borrowing.
Metal stocks witness a short covering bounce as the index closes almost 2% higher. Jindal Stainless and Moil rally 3 and 5% respectively.
The mid-cap index also shoots up almost 250 points and is within touching distance of the 19,000 mark. JSPL and IDBI Bank close with gains of over 5% each.
Bandhan Bank lists at a whopping 30% premium to its issue price. Management reiterates focus on micro-lending and medium and small business. Also reiterates that maintaining net interest margins at 10% won't be a challenge. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talk Back, the show where we tell you about all the nitty-gritties of 8 hours of trading in all of 5 headlines. I'm Lata Venkatesh, with me Prashant Nair. Hi, Prashant.
Hi, Lata. Another 50 points after yesterday's big move. Over the next 30 minutes, as you said, we will wrap up the day's top stories. Our experts will join in to answer questions. Prakash Diwan is with us in our studios to take your questions. On the charts, we have Mitesh Thakkar. Gentlemen, thanks very much, both of you, for being with us here on the show. Before we come to you with the questions, let's quickly wrap up the day's events, not just in terms of stocks, but also in terms of what really moved things. And I think we'll have to rewind the clock back to yesterday evening, when their announcement on government borrowing really set the stage for what was actually a very good day for bonds. Lata.
Oh, absolutely. But before that, the monster rally on Dow Jones, on the Wall Street indices and Asian markets continuing or rather following suit also provided a great tailwind to the bulls in India. And to add to that, you had a government telling you that it is going to borrow a good 22-23% less than what it was expected to borrow in the April to September period. That pushed up bond prices and pushed down yields by 25 basis points. It's akin to a 0.25 percentage point rate cut from the Reserve Bank. That's the kind of, that was the magnitude of the rally in the bond markets. And who are the obvious beneficiaries? People who own bonds, and that's the PSU banks. And they rallied. NBFCs, of course, rallied because the cost of money falls for them. And metals, let's not forget, the global rally, that put a great bounce in their step. But at the end of it, you had 2 huge tailwinds. Trade wars are not what we thought they would be. And you've got a 0.25 percentage point rate cut. At the end of such a big piece of, 2 big pieces of news, what did you get? All of 0.5%. That's perhaps a sobering thought.
Oh, yeah. I mean, and by the way, even this 50 points by the end of the day meant that we were we had recovered about 40 odd points from the day's low. I mean, the market had basically sold off completely at one point, and then it pushed back higher towards close. Well, stocks, so pockets of strength, PSU banks, as Lata pointed out, metal stocks did quite well, and pharmaceuticals also caught a bit of a bid. PSU banks, Indian Bank, I mean, one of the better names actually in the PSU bank space. PNB was back to triple-digit figures. Union Bank did well as well. Hindalco, Tata Steel, JSPL, three names from the metal pack, ferrous, non-ferrous, which did pretty okay. JSPL, of course, shining through. IOC, HP, BP stocks have been beaten down between 20 and 30% from their highs. And they did well. IOC and HP more than BPCL. Broader rally in names like, actually a fair bit of housing finance companies, Indiabulls Housing, PNB Housing, GIC Housing, something like Mars Financial, LIC Housing was up about 3%. So, that segment of the financial space did pretty well. You had names like Sobha Developers, which was up almost 8%. Page Industries was up about 4.5%. AU Small Finance Bank. Then you had JK Tyre, Rallis India, and M&M Financial. Actually, a lot of financials, come to think of it, which participated, apart from the PSU banks, of course. Lata.
Okay. All right. With that, let's get cracking and ask our guests where things are headed from now on. Well, first up, Mitesh, there seems to be some kind of a resistance at 10,180, 10,200 levels for the Nifty. What's the next trade?
Good evening, Lata. I think very clearly 10,200 to 230 was the zone where a couple of earlier week pullback rallies had fizzled out. So that will take some effort to get past. But the overall structure has definitely improved this time. So I think the key level to watch on the downside is 10,120. As long as that is not being broken, stay positive. There could be choppiness given the fact that this looks like a stronger pullback, but pullbacks do have their own equation of choppiness. But eventually I think 10,230 once it's crossed, we could head towards 10,300, 320, and that's the view which we'll keep as long as the lower level is not being broken.
Okay, so that sets us up in terms of the aggregate top-down market levels. Let's move on to the second big story of the day. Bonds rallied, and how? Bond yields fell by over a 0.25 percentage point after the government announced a lower than expected government borrowing program for the first half of financial year 19, that is the coming financial year. This in turn spurred a rally on banks and NBFC stocks on Dalal Street. Indian Bank, PNB, Union Bank were the leaders. Even NBFCs like Bajaj Finance rallied hard in trade. Actually, we're going to quickly play out a couple of sound bites. We spoke with a whole host of people on essentially where bond markets are headed. Let's begin with the Badri from Citi who weighed in. Listen in.
They have reduced the borrowing, which itself is a positive thing, but at the same time it is also a little bit of deferment of the into the second half. So it really doesn't change the whole demand supply. The most important of the whole rejig on the borrowing program is really the tenor rejig. By actually reducing the supply in the 10 to 14 year and actually introducing a 1 to 4 year, it's and also saying that 10% of the issuance will be on inflation linked and FRBs. I think the clear message is that we are very sensitive to the demands from of the markets. We are very sensitive to the fact that we can't or we don't want to be borrowing at very high levels. And if there is not too much appetite in the markets, then we are happy to relook at it from an issuance point of view. That's a very positive thing.
Yesterday, what happened was like the release of a blockbuster movie directed by the Finance Ministry. It was an amazing set of measures that they had announced, more or less listening to most of the demands that the industry had asked them for. Now, the government is far more going to be proactive in issuing short maturity bonds, less than 5 years. They're going to be proactive in issuing floating rate bonds. And not only that, they have actually postponed some of the borrowing from the first half to the second half by announcing a far lesser borrowing for the first half. And also they have actually now relying less on, they are relying more on small savings collections to fund the borrowing program. So all this has led to the demand supply situation being restored in a much better fashion.
Okay, so the point is that you're going to have lower borrowing rates, and that's why those who had bonds found themselves richer. We've got a question on IDBI Bank coming from Nikhil Malhotra, who has called us from Rajasthan. Nikhil ji, kahiye, what is your question?
Ma'am, my question is that I am holding 300 shares of IDBI Bank for last 1 year at the rate of 67. And should I hold or should I add more quantity at this level, because there was a confirmation in last budget by Finance Minister that Government of India is going to dilute its equity in this bank, and will it enhance the price of this share?
Prakash, you want to take that?
So you know, I mean, he's been patient enough, and I don't see any reason why he should not now step out and look at something which is more promising, because the upside from here for IDBI Bank could probably be limited in terms of time. I mean, in the sense the time it could take is significant. And as and when the government decides to sell it off is what everybody's surmising that this would happen soon and make money. I think what you could do, Mr. Malhotra, is that look at investing into something which is down and out and could probably improve dramatically. So the name that comes to my mind is Dhanlaxmi Bank. Now, it's not a great name that we speak about, but if you're willing to wait for a period like a year, the way you've done in IDBI, you would probably be better off buying this at about 20, 21, whatever it is today, and probably seek a much better upside in percentage terms in the next 12, 18 months.
Okay. Well, I can only tell you in terms of the news flow that IDBI is more likely to announce NPAs of over 30% because of the new rules. So, you know, finding a partner for IDBI with this kind of a balance sheet could be difficult. It's not impossible for the government, and maybe it's talking to people. But I'm just telling you that, you know, there is a downside as well to this. Maybe the government will want to come back with a bigger majority to do all these things, or come back with a bang and then do it. We don't know. So you're still sitting in money, Mr. Malhotra. The choice is yours. We have to move on.
Oh, yeah. Actually, let's just put that question to Mitesh as well. Mitesh, I mean, in the PSU bank space, just for a trade, if the market momentum holds and we've had this big bond tailwind you know, with us, stocks are still crushed. Anything worth trading?
I think I would still choose State Bank of India. I think it did broke that level of 240 during the monthly candle formation, but I think it's again come back above it. That's a big support, this 240, 235 zone. It's corrected from levels of 330. Trading at a long-term support area. I think good levels to accumulate. Keep a stop below 230. And I think the stock should see possibly a bounce back to about 280, 290, which will give you a good 15% kind of a trading upside in the next few months.
Right, go with the big boy. Okay, let's get to the third headline of the day. Metal stocks saw some short covering bounce. The index gained nearly 2% in trade. Jindal Stainless and Moil were the leaders. Jindal Stainless gaining nearly 6%. And some questions now.
Ashish Jain has written to us via an SMS. He's got 500 shares of Hindalco, which he's paid 101 rupees each for. He's a long-term investor. He's been holding the stock for 2 years. He wants to know if he should hold or sell. I think he's sitting on gains. Prakash, what would you tell him?
I think I would, for me, it's a hold. I know, I mean, he's really sitting on decent money, but, you know, the best part is that the entry level is given him that cushion where he can kind of live through, you know, a little bit of volatility going forward. And out of the metal stocks, Vedanta, Hindalco, Tata Steel, all these larger players will definitely be very strong, given the fact that we are seeing a huge consumption-led bull run sustain in metals. It's no more just, you know, shortage of supply that's driving these prices up. So I'm very positive on Hindalco, and you could probably put a trailing stop loss that Mitesh could guide us on, but it's essentially a hold for at least the next 12 to 18 months.
Okay. Well, gentlemen, that is Mitesh and Prakash. Do stay on. We have to take a break. Coming up, we are going to have more of your questions answered by our experts. Before we go into that break, let's leave you with some opinion we got from Citigroup's chief economist, William Bouter. He thinks geopolitical risks don't impact markets unless there is actually a major incident. Just listen in. He weighs in on the commodities like crude. We are back in a jiffy.
Geopolitical risks have indeed, in all likelihood, gone up as a result of the new National Security Advisor and the new Secretary of State, both being, I would say, significantly more hawkish and indeed unilateralist than their predecessors. But markets do not respond to geopolitical risks until it actually manifests itself as a major crisis. And so I don't anticipate that North Korea and the Middle East by themselves will act as a dampener on growth until and unless we have an actual major incident. Depending on the resolution in the next couple of months of the Section 301 tariff and possible quota impositions, and indeed depending on the resolution of the Section 232 import duties on steel and aluminum. Right? If these things, at the moment it looks like we could have a favorable outcome here, with only a limited number of countries impacted. If this doesn't play out, if the negative scenario plays out, then I think we undoubtedly will have a downward revision in growth. But for the moment, I still believe that when we get to May, we will have found something that is well short of the all-out trade wars that the Trump rhetoric, the Trump administration rhetoric, might seem to suggest is the most likely outcome.
So 50-point bounce for the Nifty, and we are essentially getting you all that happened in today's trading action. We got through the 3 headlines of the day. Prakash Diwan and Mitesh Thakkar have been answering your questions. Let's get to the 4th one. Essentially, mid-cap index shot up almost 250 odd points in trade today. That was also a big reason why advanced decline was pretty strong. It was 3:1. The index, the mid-cap index, posted its biggest one-day gain in more than a month. The mid-cap index is now within touching distance of the 19,000 mark. JSPL, IDBI Bank were some of the top gainers, ending the day close to over 5% higher each. We've got questions on some of these stocks now, Lata. DHFL, first one.
Yes, sir. Twitter user with a handle name Scooser, is that, or Scooser, has 1,000 shares of DHFL at an average price of 450 rupees. He wants to know if he should switch to another stock in the housing finance sector or not. He also says that he could hold the stock for, he has been holding the stock for 5 years. Prakash, you know, this could be my own question as well. Housing finance companies have had a roaring day, partly because perhaps Canfin Homes is finding a lot of interest in bidding. Look at the way Punjab, PNB Housing has risen today. It's, I think, a 7% or 8% monster rally. DHFL itself at 450, and any other housing stock.
Of course, you know, if you have to look at a long-term bet and then sleep well in the night as well, then Group Finance is what you would buy. And then there was this opportunity recently where Group kind of, you know, gave you that entry point, which it rarely does. Yeah. And my sense is that as the model gets more focused towards affordable housing within the overall HDFC basket, that it would start kind of seeing some very significant traction. Specifically on DHFL, I think it's lost a lot of ground because the entire environment changed very rapidly for these fast-growing housing finance companies. And the way the comeback will happen is, you know, when you do 2 things for most of these. One is manage to keep your cost of funds or keep on reducing it. They've done a lot of you know, wholesale selling of their paper to, you know, syndicated, subordinated paper to a lot of other borrowers, and that's helped them cut down costs. But now they're plateauing off on the cost of funds. So my sense is it will probably struggle a bit between this 400, 440, 450 zone. Fundamentally, it's not richly valued, but the headroom for growth will happen if premium, the PE multiple expands or the price to book value multiple expands, which might take about 6 to 8 months for DHFL. So you'll have to be patient to move to that 675. I don't know where I read that 675 level that he's probably bought in.
I thought 450. Okay.
Yeah, so he'll have to be patient if he has to make some decent returns on this. As I said, for the long term, Group Finance is ideal for a retail portfolio.
Okay. We got a question on PNB Housing. Twitter user Ashish Arora wants to know whether this is the right time to buy PNB Housing. He's got a long-term horizon. What would you tell him, Mitesh?
Yes, I think 2 things. One, the stock has corrected a lot from 1700 down to about 1100, now bouncing back. In fact, this week the stock is up 14%. It does look like, and I don't have a very long-term chart because this has been a very recent listing, only about 24 months old. What I have is, I think the downtrend correction is over, and I think the stock is heading towards 1500 plus levels. If it gets past, if it manages to break above that, 1650 could also happen. So in that sense, I would be comfortable buying at current levels, accumulating on a 5% decline, and keep the stock below 1100. I think in the next few months, which is about 6 to 8 months, there should be a 1500 or 1650 kind of a stock.
Okay. Yeah, we must also remember that the cut in borrowing program is very pleasant up until September, but then it will come back with a vengeance after September. So yields market will be good for now, but the long-term problem, I don't know. I don't know if it is. There are too many moving parts in terms of inflation, crude prices, and stuff like that. But we cannot be sure that it's going to be 7 quarter for a very long time. Final headline of the day: it was a stellar opening for Bandhan Bank, on its debut in Dalal Street, the new entrant saw its shares jump no less than 33% after opening of the trade. Chandrasekhar Ghosh, Managing Director and CEO of Bandhan Bank, told CNBC TV 18 they want to continue to lend more to the medium and small enterprises segment and to, of course, expand business. Reiterated that they should be able to maintain margins at a whopping 10%. Listen in to this man.
We are at the steady growth on that, trying on that, to reaching to the more people across the country, focusing on that core of our expertise and the need also the people in the microcredit, along with MSME, which is the beyond microfinance and below the corporate. We should like to also gradually serve in that segment because there is a need of this type of people serve the money.
Okay, we've got a question on the name Bandhan. Twitter user Vemaji Kamada has 67 shares of Bandhan Bank which were allotted to him. He wants to know whether he should hold or sell the stock. Prakash, what would you tell him? Essentially, it's basically as richly valued as HDFC Bank, no less.
No, so I was quite surprised at the stellar listing because it only stretches the valuation from what the offer price was, right? I mean, we're talking about a 30% plus markup on offer price. So I think, you know, on days when you have some global cues which turn negative or there's a sell-off in the market, till the price equilibrium is in place, it could lose some ground. So if he's not a very long-term investor and then 67 shares is not something that he's willing to hold on to, so he could probably book out and then wait for a better opportunity to buy much more out of that. So given the fact that he could sell at CMP and buy 100 shares later on at lower prices. Yeah.
No, it is expensive, no two ways about it. But Mr. Ghosh is an extremely respected man, the closest we have to perhaps Mohammad Yunus. Though you have to say that that industry is such that it can be vulnerable to some shocks, especially political shocks. Though, of course, I keep my fingers crossed, given the good work that Mr. Ghosh has put in. Well, gentlemen, we have to wrap up on that note. Prakash, Nitesh, thank you very much. But for you viewers, before you go, here's a heads up for tomorrow. It could be a big day because the SEBI board is meeting and sources tell CNBC TV 18 the regulator may take some market churning decisions. Listening to Yash Jain, our colleague, who is going to be covering this board meeting.
Well, the last SEBI board meeting for the current financial year, and the market regulator is looking to end the financial year with some very important decisions. What we are given to understand is that SEBI will consider the proposal of bringing a trading ban as far as companies which go under the Insolvency and Bankruptcy Code are concerned. We are also given to understand that SEBI might look at bringing a trading ban, as I said, and also give relaxation on the 25% public shareholding norm as far as these companies are concerned. Apart from that, we are given to understand that on the buyback regulations, there could be some changes which would be brought in as far as the quantum which could be offloaded is concerned. We are given to understand that market regulator could put a cap as far as 25% is concerned, which could be offloaded through buyback. So some very important decisions as far as tomorrow's board meeting is concerned. We'll all have our eyes on that very crucial meeting.
Those are very, very market-moving decisions if they're indeed taken. Yash, thank you very much for joining us. We're wrapping up this edition of Markets Today with a promise that tomorrow is going to be even more interesting.